We've had multiple people that have gone out there and gotten literally their dream home with $0 out of pocket.
Yeah. And it doesn't get much cooler than that. People that understand subject to, investors, it's an amazing tool for acquiring properties for free. And that gives you the opportunity to build long-term wealth and cash flow now without having to put money and or sign for anything personally. That's a pretty cool equation if you really look at it.
I cannot think of a better person to bring on the channel, specifically talking about non-traditional investment strategies and even diving deeper, no credit, no capital, no cash on the table strategies that typically help eliminate risk. This is kind of that hybrid, guys. So if you watch some of the videos, we're going to go ahead and drop a link below on sub-twos. We've done a handful at this point. Our response has been phenomenal, guys. The people inquiring about this is very little known. So most of people are out there doing wholesaling, fix and flips, long-term buy and holds. Again, this is a way that you can really build your long-term portfolio with a little bit out of pocket. So, of course, we're going to continue to invite Scott here on the channel. Scott, welcome.
Thank you. Thank you for having me.
Thanks for taking time out of your day. I know you're a busy guy.
Always my pleasure.
Give us your background.
So I've been doing real estate investing full-time 25 years and come from a volume-based background. We're doing about 150 deals a year. We would buy them for cash, fix them up, and we'd sell them off on really short-term contracts with the express purpose of creating homeowners. And one of the things we would do, Michael, is we work with folks who can afford a mortgage, can afford a down payment, for many reasons cannot walk into the bank today and qualify for institutional or bank financing. And there's just a huge segment of the population that fits that criteria. Self-employed business owners are one of the biggest that we sell to, but that is kind of a little bit about my background and kind of combined with Pink today. But I've done over 3,000 deals, always had a specialization in working in kind of the non-traditional real estate, creative real estate, no cash, no credit type deals. And I have a lot of experience with those. And sub-2 just happens to be one of my favorites. And I will tell you this, that some of my training, and everybody's had some good mentors in their life, I've had some great ones, some of the details, which is obviously where the devil lies, we were talking about that on a prior video, that's really what separates the ability to do these deals from those that may not be able to. So with the experience, with the mistakes I've made, with the good, the bad, the ugly, we've really put together kind of the process for really how to do sub-twos in a way that obviously is good for you as the investor, but also put some protection measures in for the seller and ultimately can leave the deal feeling good that both parties kind of got what they wanted. So that's just a real quickie about me.
You talk about process, Scott. Break that down, if you will. So a lot of technicalities in this, which is why most people just don't go out there and do these deals. You don't know what you don't know, right?
That's right.
So if you could kind of walk through that process, identifying the deal, kind of soup to nuts.
Yeah. So, well, first of all, I think, and I was on a podcast and I was getting asked kind of a similar question. Patterning a business around just sub-twos is going to be a hard road. It's not something that you can find in every deal. It's got to have the right seller, right motivation. So you don't necessarily know that the seller is going to be amenable to this until you've had a chance to really get to the right deal, the right seller. So kind of back up, what are you looking for? And that's kind of, that would be the first question.
So would that go back to short versus long-term goals or particular housing, like a type of house or an area of house?
I would tell you that it's probably a combination short and long-term. And then I think certainly the house and neighborhood would dictate if you want to be in it long-term,
Sure.
right? So I think short-term, long-term, with some sub-twos, you're able to obviously get paid up front, which is what we like, and get paid along the way. But the length of the sub-two is going to be predicated on the motivation of the seller and if they're willing to let you basically take over their loan for the duration of the term. And that can be challenging.
And let me hit pause here, not to interrupt, but if you're seeing this video for the first time, if you're just now getting exposed to sub-twos, we're going to go ahead and drop the video links below for previous videos on this. If people are watching for the first time, what's a subject to?
Yeah, I was going to say, if I go too technical or maybe too granular, pull me back out, and so I explain it in layman's terms. So subject to is where you're buying a house from a seller, you're taking legal title, but you're leaving the mortgage balance of the seller on the home. It's remaining in place. So the phrase comes from you're buying the home subject to the underlying mortgage remaining in place. A traditional deal, so an arm's length transaction, a willing buyer, willing seller, you sell the house, you order title work, the title company makes sure that the title is clear. They go back and make sure there's no liens or encumbrances, and they will insure over that. When you're buying a home subject to, you are buying it knowing that you're leaving the first lien, typically the first lien, in place, and ultimately just agreeing to to take that over. So the difference from a traditional deal, which is where it's a clean slate, clean deed, insurance on the deed, make sure that there's no issues that come up down the road, versus this is you are buying it legal title, you're just leaving that lien or that first mortgage in place, buying it subject to. And the agreement is essentially, and this is very important, you're not agreeing to assume anybody's mortgage, assuming, and I do hear people interchange
the old assumptive mortgage.
That's right. And you, in order to assume a mortgage, you're going to have to go to that bank. You're going to have to qualify as if you were just a Joe Schmo off the street. And now all the qualifications have to be made. You have to be able to qualify. That's just not what we do, and it's not what we tell anybody to do. You don't ever sign personally, and you're never going to assume someone's mortgage. You're simply agreeing to take over the payments, take over responsibility for all of the upkeep, maintenance, everything that goes into owning a home, utilities, taxes, insurance, mowing the grass, making sure it's taken care of until such time you have somebody in there occupying it. So you're agreeing to all those things. You're just not agreeing to assume their mortgage. You're simply taking it over.
Now, interesting, and this kind of just popped in my head here, and it's not that I haven't thought about this before. So we're talking to investors out there that are ultimately looking to try and build up their either short or long-term portfolio. Could you also get your own permanent residence this way?
100%.
Are you out there? Are there people that are out there right now that are finding their homes this way that can't walk into the bank or can walk into the bank, and they're looking for creative financing, right? So if you don't mind kind of going down that path.
No, it's actually, it's kind of an old adage in the real estate world, in particular in the kind of real estate education, real estate seminars. You hear a lot of folks say, you shake enough trees, you find your dream home, or you could. I've seen it happen a few times, and the answer is absolutely yes. So you run across the right deal in a house that interests you, there's no question this is a great option. Again, whether you're able to take it subject to or not is going to depend on the motivation and the situation of the seller.
Sure.
But absolutely, and that's one of the things that we don't talk about a lot, is you can absolutely find your dream home when you're out there shaking the trees for opportunities.
And that's part of the training. So if and when someone was interested in coming on board, obviously, guys, going to go to pink@vipfinancialeducation.com. Have a brief conversation about this. This is one bolt-on to a multifaceted kind of creative and non-traditional real estate investment model. Obviously, Scott is the founder of the company and obviously brings a wealth of knowledge to the table. You might talk to him, but ultimately, we're going to answer all your questions. Someone's going to answer all your questions. So I love that. And we've had multiple people that have gone out there and gotten literally their dream home with $0 out of pocket.
Yeah. It doesn't get much cooler than that.
No. It's been pretty exciting over the years to see, who finds what and kind of the evolution of that. So let's break it down. So if I'm looking at a deal on paper right now, I'm looking at, obviously, these are going to be more geared towards, actually, I don't want to go ahead and give you your answer. Is this multifamily? Is it single family? Is it commercial? Can you do all the above?
Sure. So the answer is you really can. Now, commercial is a different set of rules in many cases, but the same premise applies. Now, it depends on what you're targeting. So, in fact, we just put a commercial under contract last week. So now whether we end up taking it down sub 2 or not is another story. But I'll tell you that it certainly can cross-pollinate through other sectors, multis, commercial, et cetera. But my experience would be primarily residential. And so you're targeting folks, again, there can be a multitude of situations, but what I have found is the most ripe for the picking subject to sellers are those that are either behind in payments, getting ready to be behind in payments, creeping on the foreclosure door, those that may not have any equity in the property. And today, whereas a snapshot in time, even sellers behind with the market conditions, they can have some equity. But that kind of no equity, low equity, behind in payments, getting ready to be behind in payments, that's a really good motivator for the potential to sell the home subject to. So if you're targeting it, and certainly the direct mail component and some of the things that we do, you're targeting those pre-foreclosures, choosing the areas you want to be in, zip codes, price ranges, right? If you want long-term holds, you're probably not going to want to deal with war zone type properties. That would be my straight advice, by the way. I cut my teeth in the war zones, and I learned early on that that's not the best place that you really want to do business, especially when you're doing long-term type deals.
You knock on the door and then you move away.
Well, that was one of the first things I was told, right? Yeah, in case they think you're trying to collect something, they shoot you, right? So funny, not funny, but so but
the reality though.
Well, I was just gonna say that's the reality of it, and when you're concerned with your safety, that's not what we're trying to do, and again that's certainly don't want to knock that, but that's just not what we train. So depending on what you're targeting, and if you have a direct mail, hopefully you're getting some inbound calls from sellers that have fit the criteria, have some motivation. Let's assume they're behind in payments, and so you're going to ask that. You're looking at a lead sheet and kind of reading the tea leaves, as we say, and there's some really important factors. And first and foremost, if they're behind in payments, that's going to be one of the questions that you obviously ask. And again, if you're targeting pre-foreclosures in your direct mail or any sort of campaigns, they're calling you. They know and you know that they're behind in payments, so it's not even the elephant in the room. So questions are very simple. Mr. Seller, do you mind if I ask what you owe on your mortgage? It's not, are you free and clear? Because we know that they're not. And I don't
based on the target market.
Exactly. Based on, so we're getting a list of people that kind of fit this criteria.
And let me hit pause here real fast, not to interject. Well, to interject, where are you finding those people? So we'd love to give great content to our online audience. What are a couple sources? And I know you touched on a couple. What has worked for you in the past? And more importantly, almost what has not worked for you?
Well, I'll tell you what's working right now. And I think maybe that would be as valuable. So we have a couple places we work with. As far as direct mail is concerned, and there's a company called REI Print Mail. And there's also a company called Go Big Printing. And Go Big Printing actually has an app called Print Genie. Really cool. You can literally drive for dollars. We did this about 2 weeks ago, found 15 properties that looked vacant, abandoned, just kind of had the look of somebody calling me for attention, right?
Grass is maybe a little overgrown.
Yeah, mail overflown, all the signs, right? So you can, from this app, literally push a button. It'll send the postcard you want on the spot. I mean, it's kind of amazing. Back in the days, we had to go back and look up in the books downtown and try to figure out people's mortgages, and that was always a challenge. Now you have it obviously at your disposal. So,
and just to kind of dovetail off that real fast, so let's take a look at, let's say you found that you're driving for dollars, you find that house that has overgrown grass, has a mailbox full of mail. Clearly no one's living there. Skip tracing.
Yeah, that's it.
They also do the skip trace.
They skip trace it too. So obviously, if you can get a phone number, that's even better, because let's not wait for 1 to 6.
And ultimately, just make sure that someone is getting mail. If you've got a mailbox full of mail,
you're right. Exactly.
Probably don't direct mail them.
Right. I mean, it's common sense, but as we found, common sense isn't so common sometimes. So, but if you have a mailbox overflowing, direct mail may not be the best way. So, we've knocked on neighbors' doors. We've seen contractors in the neighborhood, and you just ask around a little bit. It's playing a little detective work, and sometimes you get success there, sometimes you don't. But yeah, what's neat about Go Big Printing, Print Genie, and then there's also one more program. I do want to throw this out there, because PropStream is a service we belong to. It's really thorough. They've just got amazing information at your fingertip, and so they can get you the skip tracing feature. It's very inexpensive, by the way. I think it's pennies. Don't quote me on that, but it's certainly it's in cents, not dollars, for skip tracing. So to get someone's information, to be able to call them, that's optimal, because you're going right to the source, and hopefully you can make heads or tails of whether or not there's a potential deal there right on the spot with the phone number.
Yeah, and guys, I think it's important for you to know out there, and everything that we talk about here on the channel, none of them are get-rich-quick schemes, right? None of them are you rolling out of bed, working 3 hours a day, and all of a sudden you're a millionaire, right? So he's giving you the keys to the castle, right? This is the blueprint. This is what we follow. This is how we find. This is how we uncover. This is how we take the deals down. But it is proactive. You are not laying on the couch making money on these deals. You're either going out there doing direct mail, you're knocking on doors, right? I mean, not everyone wants to do that. No. So if you don't want to do that, might not be the right business model for you if you're looking to uncover these type of sub-2 deals. But to own a property that's $200,000, $300,000, $400,000, $500,000, $1 million, depending on the market that you're watching from right now, to be tenacious and go out there and put in that legwork, that elbow grease to make that kind of money in the long term, if you can't see the light of doing that, you're in the wrong game. Go work at 7-Eleven. Go do something that's not going to require a tremendous amount of effort, and you get that guaranteed paycheck. If you're looking to break through those molds, if you're looking to have legacy wealth, if you're looking for substantial gains on your your deposits, on your savings account, your checking, your investments, year in, year out, it's going to take tenacity like this. And in many cases, it's going to take you following a blueprint, which is what Pink follows, or which is what Pink offers. So that being said, what are some bad ones that you've taken a look at? You know, what has tried and failed? And we're not trying to throw people under the bus here. You might not necessarily have to give even names out if you don't feel comfortable with that, but why have they not been successful? There's a million of them out there.
Yeah, there's a million of them out there. Well, I did a podcast for another show about 2 weeks ago, and I shared with them what was important to us is giving, and this is a little detailed, so I don't want to kind of talk over, but we give our sellers measures of protection. So when a seller deeds us the home, so they give us legal title, they really have no recourse, and they don't know what they don't know. So again, we're big believers in setting people up for win-wins, and we want to give them some measure of security, and not so much that we're not going to make the payments. We don't go into these to not make payments. Obviously, this is a moneymaker for us, but what if we fell off the face of the earth? What happens if we got hit and killed by the proverbial bus? So if I'm a seller, my concern isn't so much, are you going to make my payments and take care of the home? Are you going to fall off the face of the earth and I'm never going to see you again? And so because they don't know what they don't know, we offer two really, really awesome measures of protection for the seller, one of which gets them to say yes almost every time under the right circumstances, right? Nobody really knows those things. And so I was sharing this very openly on this last podcast, and the gentleman who is a long-term guy, been in the business 20 years and done a lot of deals, was pretty taken aback by the measure of protection that we offer, just didn't know what he didn't know. So I think that you've got to make some mistakes in there. You got to kind of get the rejection and hung up and kind of door slammed in your face to realize what's going to make them comfortable. What can I do to make them comfortable to let me get the deal? And so we've had to be creative over the years and certainly I feel like we've really honed in on what works really well. I think maybe a bad scenario, there's really two things that come to mind. People that understand subject to, investors, it's an amazing tool for acquiring properties for free. And that gives you the opportunity to build long-term wealth and cash flow now without having to put money and or sign for anything personally. That's a pretty cool equation if you really look at it. So because of that, people say, I really want to get into this. I want to learn how to do sub 2. So they identify a property and they get a seller that is willing to say yes, because as we've talked about before, you can't really quantify motivation. How do you go through when someone's dealing with a life situation that's pretty heavy duty? Their motivation is affected by that. It may not make sense to you or I, but it makes perfect sense to them.
Because you're not in their shoes.
We're not in their shoes. So if you try to understand it and you're sitting around scratching your head saying, well, why would they do that? And it's almost like looking a gift horse in the mouth, right? You don't need to figure out why their motivation is what it is. It's just the way that it is. So all of a sudden they say yes, they're interested in this, and we have a couple questions that kind of lead them down the path. Now you have a house, let's say it's not real special, has a lot of problems with it, it's not in a real special part of town. All of a sudden I'm looking at this saying, am I inheriting a liability more than an asset? If I have to come in here and not only close the property, and that's going to cost me a few dollars, but now the house needs work and it's not in a real great part of town, and sometimes the air conditioning unit out back gets legs and walks away, so now you have a big expense, right? And so those are things that I think that you would want to be.
All of a sudden you're missing all of your copper wire.
Right, exactly, right? And so it's a situation like that I would say, do you really want to close it sub 2? Do you want to take it down? So now what I would advise in a case like that, you have a motivated seller, they've said yes to a sub 2, you put that under contract, and now you go take that to another investor, let them kind of deal with it. You get paid to get out of the way, and you may not take the long dollar on that, but one of the things we love to do is every time a deal comes across our desk, it's how do we make money on it? We're not going to take everyone down. We don't want to get married to every property. There are some that we can't wait to get married to, but the others, you want to see, can you make money on them? And ultimately, we believe in putting everything under contract. Kind of very simple theme, negotiate the best you can, put in our contract, and then figure out what you want to do. And so it depends on kind of the long-term play, but houses that need a lot of work and houses that might not be in the best areas, those would be things I would look for to not necessarily want to take a property sub 2.
Yeah, so I think that's important, guys. Every deal that you're going to look at as an investor, whether you're a newbie, you're middle of the road, years into this experience, or you're a professional, obviously every deal is going to be unique. What I love that he talks about is circumstances. You have never walked a mile in these people's shoes. along the same lines, every house is a widget unless you are planning on living in it. Do not dissect the house. Do not have that paralysis by analysis. So obviously it's going to be a math problem. Like Scott said, if you have to go in there and there's kind of extensive work to do, you know, take maybe a harder look at that. But I love what you said right there, and that's always been kind of our mantra. Let's get it under contract. The way you get a house under contract is not always going to be your exit strategy. Once the market speaks, once the buyers speak, once the home has been shown, once we've done additional math or you've done additional math on that, you know, the exit strategy can change overnight. And that's just based on buyers and sellers. So that being said, guys, we are going to continue on this video series. I think we've got 4 or 5 more videos specific to sub 2. You can scour the internet right now, and I encourage you to do it. You're not going to find sub 2 information out there like you're getting on this channel today and for the weeks to come. So join us again. Obviously, we're going to keep Scott back here on the channel. We're going to get updates. We're going to have testimonials coming on here. Appreciate your time, my friend. Guys, if you like information like this, you want more kind of real estate hacks, and this would be kind of a real estate hack because most people don't understand how it goes down. It's very technical. Do your research. Get a coach, talk to Pink, whatever the case may be. You want to do these deals the right way, because if you don't, you know, obviously you can get burned very quickly, just like in any real estate deal. So that being said, ding the bell. If you want additional notifications from the VIP Financial Education YouTube channel, if you're not a subscriber already, please subscribe. We're always looking for like-minded folks. And of course, smash that thumbs up below. That helps out our algorithms. We help you go further, faster financially. Until next time, guys, thanks for joining us. Make it a great day. What are your last couple deals? Let's go ahead and add them up. I've got the calculator in front of me right now.
Well, the last 2 deals were both FSBO flips. One of them was $38,000, and the other one was $27,000. I didn't expect that. It was unusual, but that was how it happened to be, because there were houses that was difficult for the realtors, and the realtors have tried it and couldn't make it work.
So between the 2 deals, yeah, $65,000 on those 2. So a 38 and a 27, correct?
38 and 27.
And it cost you how much?
It only cost me, for one of the transactions, it cost me a transaction, a transaction loan that cost me $2,000, and then $1,500 for a legal fee. So that was $3,500 in all.
Got it. So just net, basically, I mean, you're still north of 60
yes.
on those 2 deals?
Yes.
Oh.
And I'm very humbled by it.
Are you upset?
No, no, I'm very humbled by it because I didn't expect it. Come on, we don't expect it. If I could get 10, 15, 5, I'll grab it any day for a FSBO flip, right? It just so happened the circumstances are, and we learn to articulate the best for all parties. In the end, nobody questions me how much I make or is unhappy, because they're happy with what they're getting, you know.
Yeah, sure. Okay, so we're going to